As the Intra-Africa Trade Fair starts to wind down in South Africa, the spotlight is once again on the Africa Continental Free Trade Area Agreement and how Africa can succeed in doing more business across the continent. The debate on the benefits of trade have dominated this decade, and Africa has cast its vote for more and better trade with itself. The African Continental Free Trade Area Agreement commits countries to removing tariffs on 90% of goods, progressively liberalizing trade in services, and addressing a host of other non-tariff barriers. Now, if successfully implemented, the agreements will create a single African market of over 1 billion consumers with a total GDP of over $3 trillion. This will make Africa the largest free trade area in the world. Now, the AfCFTA is complemented by other continental initiatives, including the Protocol on Free Movement of Persons, Right to Residence, and Right to Establishment, as well as the Single African Air Transport Market. The scale of the agreement's potential impact makes it vital to understand the main drivers of the agreement and the best methods to harness its opportunities and overcome its risks and challenges. Trade will be a key driver of growth in Africa. The agreement is projected to increase the value of intra-African exports. It will be a game changer for stimulating intra-African trade, and it's projected through the sole removal of tariffs on goods to increase the value of intra-African trade by between 15% or $50 billion and 25% or about $70 billion, depending on liberalization efforts in 2040, compared to a situation with no agreement in place. January the 1st marked the beginning of this intra-trade alliance between Africans, by Africans, and for Africans. We're focusing on intra-Africa trade today on the show. I'm Tolulope, Adeleru Balogun. Welcome. This is Business Edge. Joining me is Christy Filjon. He's an economist in South Africa with PricewaterhouseCoopers and, of course, a guest of the show. Christy, welcome once again to Business Edge. Thank you so much for joining me.
Thank you for the opportunity.
So let's look at a bit of the background in terms of why it's been so difficult for African countries to successfully trade among themselves as much as they've succeeded in trading with others outside of the continent. Now, we've seen that the share of intra-African exports as a percentage of total African exports has increased from 10% in the mid-1990s to around 17% by 2017. But it also still remains low compared to levels in Europe. That's 69%, Asia 59%, North America 13%. The value has risen over time, but it's still at a point where people are wondering, why has it been so difficult? So, Christy, let's start with that. Why has it been so difficult for African countries to successfully trade among themselves?
Well, yes, if you look at those numbers, 15% of trade is with the rest of Africa. We are far behind many of the other regions, but we have to remember that we are comparing ourselves to regions that have been doing this for 20, 30, 40, 50 years. At the moment, the list of challenges for Africa is quite long. We can speak about for a few hours on those challenges. If I want to think of a few, one of them would be transport challenges. So it could be that for a country on Africa's east coast, it might be easier to put their goods on a ship and send it off to Asia. And that's going to be easier and cheaper than sending it by road into another country or even one country beyond that, simply because of infrastructure problems, safety risk, the cost, those elements. So transport is a big issue. We also know that Africa's markets are fragmented. So you've got small markets in many areas and then a few big markets in the big cities. So it's not as you would see in Europe where you would drive for 1 or 2 hours, you get a new country, a new capital city. Africa is a much bigger continent to cover. Another big challenge, and that's to me a key one, is obviously moving goods across borders. So we know that border posts are very often quite slow. You could have a truck that needs to drive from Zambia to South Africa. It could take them more than a week to get there because you're standing at border posts for a few days at a time. And that's bad for fresh goods, for example. So if you want to export agricultural goods to another country, it could actually come up and spoiled when the consumer gets it at the other end. So those are some of the big challenges that I think some of the other big trading blocks really have an advantage at this stage. And obviously, these challenges will be addressed within the Africa Free Trade Agreement.
It's an interesting point you bring up. I want to follow, and that is, of course, sort of the distance between markets and the widespread land coverage area that the continent has. But it also sort of raises a question in terms of income disparity and purchasing power from economy to from one African economy to the next. So all the stories and all the positive reports we're hearing on this say that it'll create a 3 trillion rather market of over 1 billion consumers. But those billion consumers don't all have the same purchasing power. They don't all have the same extra rand or extra naira or extra shilling in their pocket. So when we look at this thing, because that's what you hear in all the reports, do you think it's really a 1 billion consumer markets, a really 3 trillion GDP worth of goods? Is that really what we're going to get when you sort of look at the income disparity spread across the continent?
No, it's wonderful to have a number like that, 1 billion people. It's going to be the biggest free trade agreement ever in the world. But the realities are you're quite correct. We have big economies in Africa, but they are quite dispersed. So the biggest economies, South Africa in the south, Nigeria in the west, Kenya in the east, Egypt in the north. So your biggest economies, those that can actually benefit the most and can actually increase their trade the most because of those developed markets and the big demand, they are sitting at the outer corners of the continent. And that means that you need to either cross through land or through sea or through air, whichever it might be. It's a long, long distance. So you're quite correct that our challenge is that it's not 1 billion people. You can't sell this to a company and say you suddenly have a potential client base of 1 billion people. You might have a few 10 millions or 100 millions, but because of the poverty we have, because we have such a large population of Africa's people living in poverty, living in rural areas, living from hand to mouth, living on subsistence farming, for example, it doesn't mean that your market can suddenly be that big. It's more realistic when you say your European market is this big because there's a much higher level of wealth. So the challenge is not only for African countries to overcome issues like transport and border posts that really increase their cost and their risk. The challenge is finding these markets. It's easy to say, let's go to the big cities. Let's go to Johannesburg, to Cape Town, to Nairobi, to Lagos. Let's go to Cairo. But you need to expand beyond those markets. That's where the big challenge is. Going as an unknown quantity from your own country to another to trade and invest. That's where the challenge lies. As I said, you don't just drive across the border in 2 hours in terms of the distance and the border crossing times. So it is quite a challenge for a company to expand its market into Africa, even though we've got this new free trade agreement. It is simply a challenging place to operate where the actual demand is very dispersed and, as you say, very unequal.
Okay, we'll come back to some of those concerns and challenges, but it's almost a year now since the agreements came into force, January the 1st, 2021. And while we know it will take several years, some have even said a decade or more before we see the full benefits of the agreement on the continent, what progress has been made since the beginning of the year? What sort of steps have pushed us further down or further forward in conversation and actions regarding the agreement?
So I think if we want to highlight a few things that have happened this year, one of them, or just an update, we've got now 38 African countries that have ratified the free trade agreement and also deposited this ratification with the African Union. And what that actually means is that these countries have adopted the free trade rules into their domestic legislation. So that enables companies in South Africa or Nigeria, for example, to trade with the rest of Africa under these rules, and the local laws actually allow this. So that's good news. 38 countries, we're making progress. It's going to take some time before we cross the 50 threshold, but it's getting there. The other important development for me most recently is that in the past month, we've seen that ministers from many African countries have agreed on rules of origin. And now that basically means that we as African countries want to trade, and we want to reduce tariffs. We want to make it easier to trade goods from one African country to the next. But we need to make sure that it is an African product. So if I'm in South Africa, I export something to Nigeria and I want to benefit from these lower tariffs, I need to be able to show what components and ingredients and inputs I've used in my product. because I can't just buy many components from China, make it into one product and send it to Nigeria. So rules of origin is very important in the trade, and it's important in the protection of African countries and African companies. So those rules have been almost agreed upon. They've reached about 88% of the products they wanted to agree on. They're looking at 90 as the goal, and the relevant trade ministers will submit this information and decisions to their governments early next year. So that's the next big step in making sure that this trade agreement gets more operational and that we can get more products into the system of free trade. So it's an important development that probably flies a bit under the radar, but it's something that in the next few years will make sure that we can get more African goods being traded between African countries once we have those rules of origin in place.
All right, Christy, we're going to take a break. Another thing I know many people are excited about under the agreement is the Pan-African Payment and Settlement System. And I want us to touch base with that when we come back. So we're looking at intra-Africa trade today. Of course, that spotlight is falling once again on the Africa Continental Free Trade Area Agreement because of the Inter-Africa Trade Fair that is winding down in South Africa. Almost a year after the agreement came into being, what's the progress and what are the next steps to increase trade between African countries? You're watching Business Edge. Right after this, there is more. And still with me is Christy Filjon, PwC economist from South Africa. And as I said before the break, one aspect of the agreement that has many excited is the Pan-African Payment and Settlement System. This is a continent-wide digital payment system to facilitate payments for goods and services in African currencies. It's expected to save the continent more than $5 billion in payment transaction costs per annum. So, Christy, tell us, how far along are we in getting this up and running? I do know that there are supposed to be some pilot projects spread across the continent to see how this would work out. So where are we? What's the status?
So there were quite a few pilot projects. I think the biggest one probably a few years ago was in the West Africa Monetary Zone, where this was trialed across border. And we've got many examples of, let's call it cross-border or international currencies. Immediately you think about the euro, but obviously also the franc currencies in West Africa. So we've got lessons that we could learn, and obviously you need some physical and software infrastructure for this. And we've learned the lessons as a continent. We've learned the lessons about how this happens. And based on, I mean, the most recent announcements, the African Export-Import Bank, AfCFTA Bank, they've announced about 2 months ago that this system is now operational, that it has been launched and that it is available for banks to take part in. So what the intention is that it aims to make it much easier for African countries to trade in their own currencies. What you see most often is that a company in South Africa trading with a company in Nigeria would quote each other in US dollars or euros or pounds, because it's actually much easier for a South African company to exchange their rand into dollars, and then in Nigeria exchanging naira into dollar, and then the transaction happens like this. That carries many costs because there's got that extra currency involved. So you want to bring down that cost as a way of improving trade, of a way of reducing the cost of doing business. And this is what the system is doing. So I, in South Africa, would do a transaction with you in Nigeria, and there wouldn't be another currency involved. So the launch is good news. The challenge we have at the moment is that for this transaction to happen, the South African company needs to give an instruction to its bank. Bank gives the instruction to the AfCFTA Bank system, and then it goes to the commercial bank in Nigeria and on to the final client. So we are dependent on commercial banks across Africa making a change to the way they do their transactions, making adjustments to the way that they interact on the forex market. So that is going to be important for African companies wanting to benefit from this, let's call it, easier system of transacting between African currencies. That banking infrastructure needs to take part of this whole system. And that's also going to take some time to get on the go, because banks have established systems, they've got established protocols. The system is launched, that's good news, but it's going to take us some time before we really see a big increase in volume where commercial banks really jump in to take part of this.
So it's very obvious there are different parts, and there's progress in different areas along the overall progress for the agreements. And I said earlier, we'll come back to the challenges and some of the concerns, and I want to reach that right now. So we know that the area and the agreement holds a lot of potential for the African continent, but there are some concerns still. We talked about the income disparity issue as it would be possibly playing out when this fully comes into force. Some other concerns also include increased competitive pressure on local economies, or rather local still growing industries in countries all across the continent, the choking of local SMEs as well, adverse working conditions and job losses, and theft of intellectual property and more. Do you share that these concerns are something that we're already seeing work being done on by individual countries to sort of bring themselves up to scale? Is there anybody who's further along the path of really being ready for this agreement to be in full force here on the continent?
Yes, I mean, the challenges for small business are real. We speak of this free trade agreement as something that's very positive, and very often the discussion doesn't look at the negative points. We know that across time, across centuries, across geographies, trade gives an opportunity for economic development. It gives an opportunity to improve the socioeconomic situation. It gives small businesses the opportunity to grow their markets significantly, create jobs, get investment, that kind of thing. The other side of the argument is it does put pressure on some companies. So if we are now making it easier to trade across borders, it might be that a small company in South Africa is not as competitive as a small company in Kenya, for example, producing a specific good. I think we're all well aware of the challenges faced by small companies in Africa when it comes to the production of goods from East Asia, for example, where there are cost benefits. So for a country, it could be easier to import this good from Asia as opposed to making it locally. Now, many other African countries could get this challenge on as well. And small businesses are the most vulnerable, especially when you serve a specific geographic market. It's great you've got the opportunity to expand, but at the same time, it means that someone's got the opportunity to expand into your market as well. I think the challenge for small business in African countries is, in general, there are so many challenges they have to face in order to be sustainable. This is an added challenge. I don't think you would see many countries that focus specifically on remedying the challenges of free trade for the small businesses, because it is just one element of their challenge. Other factors include the access to finance, the cost of inputs like electricity and water, access to transport, access to skilled labor. So this is it's an additional challenge. I don't really think that we're going to see many big impactful campaigns around trying to solve the impact of free trade on small business, because there are already so many processes on the go, public sector, private sector, non-governmental organizations that look to help out small businesses in this regard. It is something that is a challenge, most definitely. And within this context of coming from this COVID-19 recession in 2020, we need small businesses to continue operating. We need them to continue creating jobs. So it makes them a bit more difficult in the short term. You can't really tell them, look, in the long term, it's great for the economy if they're feeling pressure right now. So it's going to be of concern to some small companies, and hopefully they've got the local systems that can support them in continuing operating when trade is much easier between the countries.
Okay, so I want to touch on the Intra-Africa Trade Fair before we wrap up, but just let me quickly ask, we've talked about a few of the next steps that we're already seeing. There's a whole year ahead of us again, 2022, with AfCFTA taking further steps into becoming reality. What do you expect to happen next? You've talked about the meeting of the ministers when it comes to the rules of origin. We've looked at the payment system as well. What are a few of the big things that you expect to happen with the agreement in 2022?
Well, we've so far seen a focus on the trade of goods, it's very logical to first go with physical goods. The next steps, once we're finished with making it easier to trade goods, is the trade in services and the movement of people and the movement of money. These are very less tangible than physical goods, so it's trickier to get all the rules in place. I think in order to develop Africa's services market beyond the biggest economies that already have strong services markets, we need to be sure that those rules that come into place to support the flow of services and people and money across borders are effective from the day one that they are implemented. I know there are several of the large countries that really wants to focus on being able to export more of their services to the rest of Africa where there is a big need. And it's going to be dependent on them to lead those discussions and make sure that they actually get these rules in place. So for me, that's the next important step that I'm hoping 2022 will show us a lot of progress. Hopefully, when we talk about this again in 12 months from now, we do know that there has been progress made on the services component, because that is a way of growing and sharing Africa's intellectual capital with itself, not being as dependent on external services, but more focusing on providing services for our African neighbors, which is something that we focus on when it comes to the skills level that is being exported. You need certain set of skills to export goods, but when you export services, you need people that are highly skilled. So this then cascades down into the demand for educated people and the type of higher incomes that can be created within Africa by employing people that deliver high quality services to other African countries.
Okay. The reason we're talking about this once again, of course, is because the Intra-Africa Trade Fair has shined the spotlight on the agreement once again, and it's wrapping up. Now, the 2018 edition delivered deals worth about $32 billion, of which $25 billion has been implemented and another $2.5 billion are being processed. Now, this year, it's projected that it's going to be $40 billion in trade and investment deals that will be signed. What do you think of that number, particularly coming out of COVID-19, with African economies coming out of recession? Is it where you expected it to be? Do you think we could have done better, all things considered, with the state of the African economy as well as the global economy?
I expected the number to be bigger than 2018, which it has. I'm not going to say it should have been bigger. Ideally, it's going to be much bigger the next time we meet, but it's a good, strong number that was, for some people, probably unexpected, given we've got this COVID situation still going on. It creates so much uncertainty about where countries and economies are going that you can understand people might be hesitant in making new deals like this. So I'm very happy with the big number. I think, like I said, the next time that we have this fair, we could have an even bigger number. It all depends on how much the free trade agreement actually enables companies to do these cross-border transactions. I think an element of the increase in commitments we saw this year is already because companies are looking ahead 2, 3, 5 years and seeing a situation where it's much easier for them and cheaper for them to trade across borders. So I would hope that as we implement this free trade agreement over the next 1, 2, 3 years, that these trade commitments announced at trade fairs actually grow significantly more, because that's going to be a sign, a tangible sign for us that African companies are embracing this free trade agreement and actually implementing plans to benefit from it. It's a good signal from the private sector specifically that these companies are making these deals, that they're showing confidence in this free trade agreement. So for me, very good result. We obviously want to see more of it, but a good result nonetheless, given the COVID context and given that it is such a good signal that people are embracing the starting elements, at least, of the free trade agreement.
All right, Christy, thank you so much. I know we'll be touching base again towards the end of the year, but thank you for your time today. Glad to have you on the show.
Thanks for the opportunity and that we could discuss this good news about African trade.
Definitely. And it is good news because the data is there. When African countries trade with themselves, they exchange more manufactured and processed goods, have more knowledge transfer, and create more value. The Africa Continental Free Trade Area agreements can play a game-changing role in Africa's economic diversification and inclusion. This is not an opportunity to be missed. Coming up next is NC4 to watch, a few stories we're keeping our eyes on. Stick around. We're starting in East Africa, where Kenya's imports from Tanzania are worth about 20.5 billion Kenyan shillings in the first half of 2021. Now, this comes on the back of resolved trade disputes between the two East African countries. 3 Nigerian firms have won nearly $1 million in funding provided by Chinese billionaire Jack Ma of Alibaba. Now, Relief, a Lagos-based food processing company, took second in the contest and will receive $250,000. 2 other Nigerian firms, Grid and Publicere, were among the top 10 finalists. They will each receive $100,000 in funding. The South African Central Bank's move to raise borrowing costs signals the end of record low interest rates in some of its neighbors. Monetary policy committees in Namibia, Lesotho, and Eswatini could follow suit after South Africa's rate-setting panel raised its benchmark rate to 3.75% from 3.5%. The decision should leave domestic markets less vulnerable to the prospect of more aggressive U.S. Federal Reserve tampering. And finally, the Gambian government has increased its stake in Shelter Afrique to 0.27% after an additional $19,000 capital injection into the firm. The Gambia is now the 11th country to increase its stakes in the firm after Kenya, Tanzania, Cameroon, Mali, Rwanda, Uganda, Togo, Swaziland, Ivory Coast, and the Democratic Republic of Congo. And that's the show for today. Of course, wrapping up this week as well. Don't forget to subscribe to our YouTube channel and download our mobile app so you can catch up on any of the conversations we've had on the big business, economic, and financial stories coming out of the continent. Don't forget to follow us on social media at News Central TV. I'm Tolulope, Adeleru, Balogun. Have a pleasant day, a great weekend, and make it a date. 11 a.m. West African time on Monday, we talk African business.